Welcome to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 6th, 2025, we're putting Ethereum, or ETHUSD, under the microscope to break down its recent movements and future potential, combining both current events and detailed chart analysis. The cryptocurrency market is abuzz with significant news surrounding Ethereum. A major headline, hitting just an hour ago, reveals that Bitmain Immersion Technologies has now become the largest corporate holder of Ethereum, amassing over 833,137 ETH, valued at a staggering $2.9 billion. This aggressive accumulation, roughly 24,000 ETH daily over the past 35 days, signals strong institutional confidence and positions Bitmain as a key player in the digital asset space. This move alone is incredibly bullish for Ethereum, reducing available supply and affirming its role as a legitimate corporate treasury asset. On the price front, ETHUSD reported just minutes ago that Ethereum is currently correcting to around $3,640, following a dip from the $3,700 resistance mark. This aligns with CoinMarketCap's live price of approximately $3,585.26, indicating some immediate selling pressure after recent highs. However, the overarching sentiment from multiple sources, including ETHUSD, is highly optimistic. Analysts note that Ethereum's technical patterns are mirroring Bitcoin's explosive 2021 breakout, suggesting a bullish crossover and potential for significant price appreciation. Even leading AI solutions like ChatGPT, Perplexity, Gemini, and Grok were asked about Ethereum's future, and all agreed ETH is more likely to hit $10,000 before XRP reaches $10. Their reasoning emphasizes Ethereum's robust ecosystem growth, ongoing network upgrades, the increasing importance of real-world asset tokenization, and critical institutional adoption, notably driven by the impact of ETH ETFs. While Binance user-driven predictions suggest a modest 5% increase to $3,608.99 in the short term and $4,587.65 by 2030, the broader market and AI consensus lean towards much more aggressive long-term targets, with the $10,000 mark frequently cited as a major goal. Now, let's turn our attention to the charts to see how these fundamental narratives are reflected in price action. Looking at the daily chart, we can clearly see the broader price movements of ETHUSD over the past year. After a significant peak around $4,000 in December 2024, Ethereum experienced a notable downtrend, finding a strong support zone between $1,800 and $2,000 in March 2025. This $1,800 to $2,000 range acted as a critical reversal point, with strong buying volume preventing further declines and initiating a new uptrend. The aggressive accumulation by entities like Bitmain likely contributed to this rebound and the sustained upward momentum we've observed since March. The price then recovered substantially, breaking back above the key psychological level of $3,000 in early May 2025, which then transitioned into a support zone. We can identify a clear resistance zone forming between $3,700 and $3,900, with several attempts to break past this level, notably on May 27th and again in late July 2025, where it touched $3,889.80. This area represents a significant hurdle for ETH to overcome for further bullish continuation. The price correction mentioned in the news, down to the $3,600 range, is visible on this chart as the latest daily candle shows a close at $3,613.90 on August 5th. This represents a pullback from the recent high of $3,889.80, testing previous support levels. The bullish crossover patterns noted by ETHUSD suggest that despite these corrections, the underlying technical structure remains strong for long-term growth. The volume on recent upward movements, especially during the recovery from March, indicates genuine buying interest, while some red candles also show increased selling volume during profit-taking or macroeconomic concerns mentioned in older news. Now, let's zoom into the more recent price action using the 15-minute chart to understand the immediate short-term trends and potential trading opportunities. Focusing on the period from late July through early August, we can observe the micro-movements within the larger daily candles. On July 31st, after a period of consolidation around $3,700, ETHUSD started to show weakness, marking the beginning of the correction mentioned in the news. The price experienced a sharper decline into August 1st, breaking below minor support levels. Notice the increase in selling volume on some of these downward trending 15-minute candles, indicating active distribution. Despite this, strong buying interest emerged around the $3,400 to $3,500 level on August 1st and 2nd, leading to some swift recoveries. This range appears to be acting as immediate short-term support, with buyers stepping in to defend these price levels. The hourly chart provides a clearer view of these recent volatile swings. The drop from July 29th highs near $3,900 down to the current $3,600 range has been quite rapid. However, the strong bounce on August 4th, with a daily close at $3,719.99, demonstrates the underlying strength and confirms that buyers are ready to defend dips, possibly in anticipation of the Bitcoin news or broader bullish sentiment. The current price action on both the hourly and 15-minute charts suggests a consolidation phase following the recent surge and subsequent correction. Traders should watch for decisive breaks from this consolidation pattern. So, where does this leave us for trading decisions on ETHUSD? Short-term, Ethereum is in a corrective phase, and we need to identify clear signs of a reversal. The immediate support to watch is the $3,500 to $3,600 area, where buyers have shown resilience. If this level holds, a bounce back towards the $3,700 to $3,800 resistance zone is likely. A clear breakout above $3,800 with significant volume would signal a strong short-term bullish continuation, potentially paving the way towards new highs. Conversely, a breakdown below $3,500 could see ETH retesting the $3,400 area or even the $3,000 psychological support. Long-term, the bullish narrative is compelling, driven by strong institutional adoption like Bitcoin's massive accumulation and the ongoing technological advancements within the Ethereum ecosystem, such as the increasing importance of RWA tokenization and the potential for new ETH ETFs. The consistent prediction from AI models of ETH reaching $10,000 prior to XRP hitting $10, which requires a roughly 300% increase, lends significant weight to the long-term bullish outlook. This confidence is rooted in Ethereum's fundamental utility and market position. Key price levels to monitor include the strong support at $3,000, which has historically proven to be a robust floor. Above current price, the resistance zone from $3,700 to $3,900 needs to be decisively overcome. Beyond that, the all-time high of approximately $4,900 would be the next major target, and then potentially the ambitious $10,000 mark as predicted by AIs. For short-term trades, look for candlestick reversal patterns on smaller timeframes at these support zones, coupled with an increase in buying volume. For long-term investors, sustained accumulation on dips, especially around major support levels like $3,000 to $3,400, appears to be a sound strategy. Keep an eye on broader crypto market sentiment and any further news regarding institutional adoption or regulatory clarity for ETH ETFs, as these will be significant catalysts. The likelihood of ETH breaking past $3,800 in the short term is moderate, around 60%. If the general crypto market sentiment remains positive and there is no major macroeconomic headwind like widespread risk-off due to, say, a new geopolitical conflict, a decisive breakout would be reinforced by a significant increase in buying volume, similar to the volume seen during the May 20th rally. The probability of reaching $10,000 long-term is high, perhaps 75 to 80%, Given the strong fundamentals, institutional interest, and positive AI projections, this scenario would be strongly reinforced by continued ecosystem development, successful RWA tokenization, and the approval of more ETH ETFs. Conversely, failing to hold the $3,500 support level could lead to a retest of $3,000, with a 40% probability if selling pressure from profit-taking intensifies or if there are unexpected negative macroeconomic shocks. Always remember to conduct your own research and manage your risk effectively. Thank you for joining Explain the Charts, and we'll see you in the next video.